David agreed graciously to sort of offer up some market observations. One of my takeaways, as I told David a couple minutes ago, and when we were chatting over the weekend, whatever, I noticed that there's an element of optimism in his report on his observations of market.
Thank you, Victor. As an investment banker, I'll try to predict the future for you on what's going to happen. David Goldstein, I currently am vice chairman of the technology group at Jefferies. I've been an investment banker 30 years straight. I spent 10 years at mostly Salomon Smith Barney, which is Citi today, close to 17 plus years, 18 years at Credit Suisse.
I want to talk about M&A a little more. I think we got the message on the IPO side, but I want to flesh it out a little. Well, we're seeing a bit more on and I didn't see this in here, with our PE buyers. You know, they've been now holding longer than they would have hoped or expected in terms of their investments. And so while I know the public capital market, equity capital markets are going to correct, and therefore they might create opportunities from that angle, what is how is that the length of holding an investment? How is that playing into this whole dynamic? Because again, people are getting anxious to get out, right?
Yeah, I think there was a tax law change many of you are familiar with when Trump was in, where he the amount of that the PE funds and VC funds would be taxed on as they held a company would drop after about 3 years to half the rate. So ever since that was passed a number of years ago, I noticed from when I started in banking, these funds, they're 10-year funds, they tend to be, and they usually have 2 one-year renewals, so they can go for about 12 years, then they're really forced to liquidate. So a lot of companies used to sell, probably my first 20 years in banking, when, between years 5 and 7. And then ever since that tax law change happened, a lot of the funds started with their better portfolio companies. Within 3 years, they would start a process. They'd even try to time it. So like 2 3/4 years in, they would start to hopefully close the deal a day after the 3-year anniversary, because they're incented to the funds. If they raise another fund with more, they get a big part of that fees for themselves. So they were incented to keep trying to deploy the money, get good returns, and raise another fund quickly. It feels like, just with the environment, we're going back to those 5-7 year holds for most companies that are going to be out there. So I think a lot of the funds have sent notes to many of their portfolio companies to make sure they have enough cash in their business.
Interestingly, what we've seen also in our market is there are a lot of accretive acquisitions, bolt-ons, where basically, essentially, the sponsor, the PE shop, they're having their portfolio companies buy EBITDA, right? And so we're seeing a lot of the smaller deals in the range of 25 to 150, $200 million, just again to accelerate that time
is
frame.
They need to get to profitability,
Yeah.
if they want to be able to sell their own company at a higher value. Because most public companies, their first question is it making money? And if I say no, I'm sorry, we're not interested. So across the board, with the vast majority of the public companies I deal with, they can only really buy profitable companies. So that's very important. We're definitely seeing some of that, even if the small tuck-in doesn't grow much. It's just the fact that it can make money. They'll want to buy that company more than someone that's growing fast.
Every cycle with an American election globally has impact. And I was with some of our clients actually in Munich, and I was amazed at how they're following our elections generally. Even the battle at the House of Representatives speakership and all this kind of stuff. I'm like, and I mentioned that, and one of my friends or a client leaned over to me and said, said what happens in your elections actually is more relevant than what happens in our elections. And I'm like, wow, that's pretty compelling. Any reaction to how the elections, forget about who wins, who loses, but the concept of an election, how that plays into what you're talking about?
Yeah, in most election years, the market does better because the Fed tends to support the incoming president. And so and you don't know what conversations are happening behind the scenes, but the incumbent president, whoever that is probably behind the scenes pushing the Fed to always try to lower rates because that will help the economy and the market. And if the economy and market does well, more people will vote for that incumbent presidency. So a lot of times during election years, you'll see rates coming down, the market going up, and there'll be more deals happening. And I also think in particular, because it's November, as we get to the middle of the year, a lot of investors start looking at the following year. So in the middle of 24, a lot of companies start getting valued off 25. If everyone definitely is going to believe rates are going to start coming down at some point in 24 into 25, so smart money will try to come in right before rates start coming down. As people start looking and getting a feel for what's going to happen with rates, you could see the second half of the year. The optimistic view is because the election cycle and maybe pressuring of rates coming down and looking at 25, where rates will hopefully be down closer to below 4%, you could see the market start going up, and therefore that backlog of deals that hasn't happened will likely start coming to the market.
So it's funny, part of what you said is counterintuitive to me because I would have thought that with the election year, you don't know which administration is going to win or end up in January. And so investors generally across the board would hold back in that particular election year until the dust settles on the election. You're not saying that.
That's why Victor's a lawyer, not an economist.
Final, any last closing observation regarding markets, prognostications that you haven't given already?
No, I think what I said before, I'm fairly bullish that the second half of next year, you're going to start to begin to see, a good gradual pickup in activity where the deals were actually starting to get announced.